Hi everyone, welcome back to another video. So in today's video I'll be going over my brand new Trading 212 dividend portfolio. All the money has now been transferred across from my Freetrade account, so I managed to get some of it invested back in. So I'll be showing you what new positions I've opened, Dividend Kings, and also some new REIT stocks, as well as existing stocks that I had in my previous portfolio. But obviously before we get into it, guys, if you're new, definitely consider subscribing. I want to go to get to 2k subs, so all the help that I can get to reach there will be much appreciated. Also, don't be scared about leaving a comment. A like on the video really helps boost the channel and gets out to more viewers. So into the video now, guys. Got to try and keep it shortish today, just sort of go over all my positions, but obviously focus more on the new ones that I've purchased. You can see I've got £1,138 in the portfolio on the Trading 212 app. So obviously the market's had a bit of a boom recently with news of Pfizer getting a vaccine for the you-know-what, which we can't say, and if you know, you know. But yeah, so stocks have sort of had a bit of a boost since then. This new portfolio, I only invested in it, started investing in it properly, I think it was, last week. So this week it was Monday morning where I made the big deposit, and I've still got in cash, three funds, £2,659, which I'll be slowly adding back in as time goes on. Obviously don't want to invest it all at once at the same sort of prices. You want to try and take advantage of many different stock prices as you can. So we'll just take a look at the new stocks I've got in the portfolio now, guys. So you can see AGNC is the first stock that I have on the list, which I have 5 shares of currently. AGNC is a monthly paying REIT. So as you can see at the moment, they are down 14.5% in the last year. Relatively cheap stock, but I'm up just over 2% on this position. Again, it's a company we pay a monthly dividend, which is a dividend we're getting reinvested straight back into them each month. I have a dividend of 10% and quite a low PA ratio, really. So again, obviously they are around about $5 lower than it was. So obviously they do like the clawing the way back up. But again, this one I'll just be looking for the monthly income. So then on the next, one of the other new stocks I've bought is Hormel Foods. This is a dividend king, been consistently growing the dividend for the past 53 years, really solid company. So they engage in the production of range of meat and food products. They operate through segments of grocery products, which is engaged in the processing markets and self-stable food products. So obviously this is a sort of company, obviously they're going to be around for a long time. Obviously food is an absolute essential in life, so you can see why they've been consistently growing that dividend for 53 years and are a dividend king. So just the one share at the moment, I'm just slightly down on my investment, but again, this will be one I'll be looking to invest in quite regular. Not an expensive stock at the moment, although they are rising. In the last year, they're up 21.45%. So that's Hormel Foods. So, and then the next stock we'll take a look at is another REIT, which is Main Street Capital. So in the last year, they're down 29%. Obviously up 4.35% at close yesterday. Obviously the US market isn't open at the time I'm recording this video. Again, another monthly paying dividend REIT, which I own 2 shares of at the moment. I'm slightly up with 5% on my investment. They're a principal investment firm. The principal investment objective is to maximize its portfolio's total return by generating current income from company debts and investment appreciation from its equity. So you can see they have a market cap of 2 billion, relatively again low payout ratio, monthly dividend yield of just over 8%. Again, a relatively cheap stock at the moment. I think I purchased it for £22. So again, reinvesting that dividend income each month that I'll receive from them. So the next is people say they're the king of the monthly dividends, which is Realty Income. I own 3 shares at the moment, and they're up 9% this last week, having a great week so far. And I'm up 4%. My average cost is £46.86 or $61. That's a good cool thing about the Trading 212 app. It does show you your price in dollars and in pounds as well, which is good to get the comparison. So again, a few key ratios. Obviously, payout ratio 44.84%, and then I have quite a steady yield of just under 4.5%. Again, this is one, love it for the monthly income. So I'll try and pick up any shares of O when I can. On to the next stock. Obviously, a stock worth mentioning is Pfizer. Obviously, the company are blessed finding this magical cure for the world. No, I'm just joking, but we'll see anyway. Yeah, they had a good start yesterday, but since then they've sort of come back down to earth a little bit. Again, it's a stock I'll be looking to add money back into when I feel like the time's right. I had 4 shares in my last portfolio, so I'll be looking to get back to that sort of level. Then my next new stock, which is Store Capital, another REIT, but this one pays quarterly, not following the trend of the other ones, but hey ho. They've had a good week so far, up in the last week, 17% since last Wednesday. So I'm up 15% of my investment. They are an internally managed net lease real estate investment trust. They are engaged in acquisitions, investment and management of single tenant operation and real estate properties as of December, blah, blah. You don't want to read all that, but if you can, it's good to have that information on. I've had a quick read of it. So again, some more key ratios, a relatively low payout ratio of just under 30 and dividend yield of 5.15%. So again, quarterly dividend payer, but still they obviously do pay obviously quite a decent yield, and they're still at a relatively low price at the moment, slightly behind what they was after everything crashed back in March. So that's Store Capital. My next one is another dividend king, which is Cisco. Cisco, quite a decent week so far, really decent actually, up 20%. So I'm up just under 7% really on my investment so far. So they have a payout ratio of 44, which is quite solid really. You can see why they've been paying a dividend for 50 years, a really solid yield of just under 3%, and the payout ratio is good. Again, that's my sort of new strategy, guys, invested in good quality dividend kings and dividend aristocrats, as well as good monthly paying REITs, as well as, and obviously ETFs. I'll be adding a lot more ETFs to the portfolio as well. So another new stock, which is Unilever. Unilever, a great dividend paying company, quite solid. I think they have had a few cuts over the years, but generally they still do pay out quite well. Not much in the returns, 0.36%. Payout ratio really quite low as well, and a really solid dividend yield of just under 3%. Let's move on to next new stock, which is Unilever. So that's it for the new stocks and REITs. Just the one new ETF that I've added, which is the Vanguard FTSE Emerging Markets. Again, you can't really go wrong with this stock. It's up 6% in the last year. Managed to fully recover from the downturn in March. Again, it pays a really quite a good dividend yield. It doesn't actually say on here, but yeah, I think they do pay around 50 pence per share in dividends, so they pay out quarterly. So that's it for the new stocks, guys. As you can see, you'll see why I only have one share of a lot of stocks at the moment. Obviously, I've got my cash ready. I'm trying to take advantage of any different stock prices, probably try and invest maybe once every 2 weeks, or just when certain stocks fall. So one stock I've been looking at is Starbucks. They're down 4% in the last, well, it closed yesterday, they were down 2.9%, but I'm down 4%. So again, what you got to be careful is when you're looking at your returns, you got to see in the last 3 months, they've climbed. So this little dip here, it's not really a fall for them as such, but more for you. And in the last 3 months, they're up 21%, and then the year 14 overall. So you just got to try and average down your position when you can, even though that might not be, you know, they still might rise after that even. So Starbucks, again, I had 4 shares last time, so we're looking to add each position back slowly. Maybe I might buy another share this week. We'll just have to wait and see. So I managed to buy back some of the BP shares as well. BP, I've had a good start to today, but they've sort of drifted off. But again, I was down in this position. I had 39 shares in my old portfolio, so I'll be looking to probably add them back as well to try and cut any losses that I had. So yeah, guys, the portfolio is doing well. Started quite well so far, up £20, just under 2%. So I'll be going into more detail on all my other stocks next video, but you've seen a lot of the stocks that I own in different portfolios, so I wanted to mainly focus on the newer ones in this video. So obviously in the next video, I'll go more in depth in the whole portfolio, as well as going over stocks that I sold and why I sold them. So guys, that is pretty much it for the video. Let me know what you think in the comments below, and don't forget to smash the like button. Obviously boost the channel loads. So yeah, I hope you look forward to my new Trading 212 portfolio updates, guys. Take care. Bye.